Hello and welcome back to this channel. 6 Forex trading tips and tricks make your trading profitable. In this video, I will explain how you can improve your Forex trading skill to the next level. I will elaborate on different tips and tricks that Forex traders could implement throughout the day to watch, analyze, and monitor their trade. Since Forex traders enter and exit the trade many times during the day and do not like to hold on to their trade overnight, therefore these tips and tricks can improve their profit considerably. Forex tips and tricks are as follows. The first one, trading with the trend, improve your Forex trading drastically. Number 2, always use H1 time frame or higher and never use lower time frame. Number 3, in range market, the longer the range, the harder it breaks. Number 4, volatility contraction lead to volatility expansion. Number 5, using at least 1-to-1 risk to reward ratio has a major Forex trading advantage. And finally, number 6, improve your Forex trading profit from the false breakout pattern. Number 1, trading with the trend can improve your Forex trading drastically. One of the best ways to improve your Forex trading technique is to trade with the trend. You probably heard it many times, and I have explained this issue in so many of my YouTube videos that trade with the trend can increase your profit. Many professional and smart money use bank secret indicator. With this indicator, you can easily find when the market is in an uptrend, indicated with a blue bar, and when the market is in downtrend, indicated with a red bar. You can have this indicator free of charge for 7 days, and if you find it interesting, then you can purchase it. Generally, trading market has 2 types of move. The first one is trending move, which in general called the long and strong leg of the trend. It moves in the direction of the trend and sometimes with a strong momentum. This is excellent trading situation since the market usually moves quickly in your favorite direction. The second one is retracement move, which is the weak and short leg of the trend as it moves against the direction of the trend. This is more stressful for traders as the market could quickly reverse against you and you lose your profit. So decide which one you want to choose. Let's see an example. Trading with the trend, improve your Forex trading profit. This is Air Canada stock D1 time frame Yahoo Finance. The best and most profitable Forex trading is enter the trade with the trend. To do so, first identify if the trend is trending upward with a good volatility and momentum. This can be done using a slow moving average like SMA 50. As you see, the price trend is above the SMA 50 all the time, and that means the trend is going upward. Then we use SMA 25, and why we use SMA 25? Because SMA 25 is the best fit for this price trend. You see at many locations like here, 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 and here, the price come close to SMA 25. These are the locations that we have to use to enter the trade. Now, in order to find the precise entry trigger, we go to 1 step lower time frame, H1 time frame. This is D1 time frame. We go to H1 time frame, and you see where the price is exactly cutting this SMA 25 and going upward, or come close to SMA 25 and heading upward. As soon as you see that it's heading upward, you can enter the trade. And you see the price is always above the SMA 50, so you know that you make money. So I recommend you that you never trade against the trend, like here, like here, like here, and never enter the trade when the price is far from SMA 25, like here, like here. Always when the prices come close to SMA 25, that's where you enter the trade. The second tips and tricks: always use H1 time frame or higher and never use lower time frame. It is wisely to follow a smart money, bank and institution trading style whenever you trade Forex. These institutions always use H1, H4 and D1 time frame to trade Forex for better profitability, and never use M1, M5, M15 or M30 time frame. Traders who use lower time frame than H1, normally 95% of the time they are losers due to huge false signal. These institutions invest a huge amount of money in Forex to make profit. They have a huge facility like smart computers, expensive softwares, and many professionals that work for them. So my advice is to use H1 time frame and higher whenever you trade Forex. In range market, the longer the range, the harder it breaks. This is the price trend, Euro JPY stock D1 time frame, Yo Finance, and these are support and resistance level. As a Forex trader, if you see the market is in range for quite some time, you can watch and prepare for a strong breakout, because the longer the range, the harder it breaks. Traders always go long near support and go short near resistance. This area, and they put their stop loss below support when they go long or above resistance when they go short. As the time goes by, this will create a cluster of stop loss along with fewer participation, because as the range continue for quite some time, there are less and less participation around these areas. But the market breakout is inevitable. Eventually the market has to break out. It is not going to, the range is not going to go forever. If the market break out higher like this, there are traders that they take this opportunity to go long here, and traders that they go short near resistance. This will fuel the breakout and increase buying pressure. This leads to a strong breakout and possible start of a new trend. So have in mind that whenever you see the price is ranging for quite some time, be prepared to enter the trade. Number 4, volatility contraction lead to volatility expansion. This is the price trend Air Canada stock D1 time frame Yo Finance. I installed Bollinger Band to demonstrate when volatility decreases, the two bands come close to each other. Like here, the two bands come close to each other because the volatility decreases, and here the two bands come close together because the volatility decreases. And when the two bands become too narrow, like here or like here, this is the ideal place to enter the trade in these two locations. And when the volatility expand, for example, in this area, the volatility expand, in this area, the volatility expand, the two band become wider. You see that the two band become wider here and wider here. And the price is heading upward. For example, here we see the prices in consolidation, low volatility and build up, and the two bands are contracted, and the SMA 20 of this Bollinger Band shows flat. It means the volatility is at its lowest level. Here we can better time our entry and enter the trade. Here and also here. This will allow traders a tighter stop loss and increase their position sizing for the same level of risk. As the volatility expands or the two band become wider, the price is heading upward and we are already in the market and do not need to chase the market anymore. So Forex traders can use volatility contraction and expansion to improve their trading. Volatility contraction lead to volatility expansion continue. This is BBD stock, Yahoo Finance D1 time frame. As you see, the volatility is at its lowest level for quite some time, from all the way here, and you see the two bands are very close together, especially here, and that's the sign of a weakness. In this situation, you can enter the trade right here and also increase your position sizing since the price is low. And when the volatility expands and the two bands become wider, the price is heading upward and you are already in the market and make benefit or make profit. This is another tip. Tips and tricks can be used to improve Forex trading. Number 5, using at least 1-to-1 risk to reward ratio has a major Forex trading advantage. If you're using 1-to-1 risk to reward ratio, you are 3 times more likely to be a profitable Forex trader. This is proven by the result of the survey conducted by Blue Edge from 43 million Forex traders that are using a skewed risk to reward ratio. The win trade observed on Euro-US dollar was 61% and the lose trade was 70% bigger than the win trade. The average lose trade was 83 pips and the average win trade was 48 pips recorded. That is the reason almost all institutions and smart money use this ratio for better profitability. So if you simply use 1-to-1 risk to reward ratio, you will increase your odds drastically and 3 times more likely to be a profitable Forex trader. Finally, the last tips and tricks is improve your Forex trading profit from the false breakout pattern. What is a false breakout? Ideally, false breakout happen when there is not enough buyers or sellers to continue supporting the asset. A false breakout is when price temporarily move above or below a key support or resistance level, but then later retreats back to the same site as it started. Therefore, false breakout can lead to an ugly situation. In reality, there is no way to avoid false breakout completely, or there is no way of knowing ahead of time that the breakout is going to be a false breakout. The one easy solution is to let some time go by to see the reality of the false or true breakout. Now, what we can do to reduce the effect of false breakout situation? The following is the most effective probable false breakout avoidance. The first one is false breakout can be avoided by using price alert or percentage filter. 2. False breakout can be avoided by waiting for the candle close outside the barrier. What I mean by barrier: support and resistance, trend line, moving averages, wedges, triangle, and so on. Number 3, false breakout can be avoided by stop chasing parabolic price trend. And finally, false breakout can be avoided by trading breakout with build-up. The stuff explained here is not only used for Forex, it can also be equally applied to all other markets. False breakout can be avoided by using price alert or percentage filter. Price alert. Price alert lets you track when the price of a stock moves up and down a certain amount. You can use price alert to track securities you hold or want to buy. There are 3 types of price alert you can set up. The first one is a security reaches a specific price. The second one is the price of a security increases by a certain percentage. And the last one is the price of a security decreases by a certain percentage. And finally, percentage filter. If you don't have time to be your own currency strategist, the rate alert option allows you to set a target market rate, and the currency expert will monitor the market for you and notify you via SMS. False breakout can be avoided by waiting for the candle close outside the barrier. This is the price trend, and these are support and resistance area. So the price is originally coming inside the range, hitting the support first, and it gets rejected by the support and going upward and bouncing back and forth between support and resistance, and finally it break out and going straight upward. So this is a true breakout here. So the traders can enter the market here and the price is going upward. Now, when the price is rejected by the support and going upward, then this candle, it break the barrier, the resistance, and going upward and close outside. So from this point of view, this is a true breakout, but we have to wait for the next candle to form. And when the next candle, you see it closes way below the close price of this candle. So that means that, again, that is the false breakout. Now these candles, they're all didn't close outside the barrier. So these are all false breakout. And even this one is a false breakout, because although it closes outside the barrier, the resistance, but the next candle, we have to wait for the next candle to form, and the next candle closes way below the close price of this candle. So again, that's a false breakout. Now, then these are all false breakout because it didn't close outside the support. So you see that it is possible to improve your Forex trading profit from the false breakout pattern by just waiting for the candle close outside the barrier. Another tip and trick is to avoid Forex trading on a strong parabolic breakout. This is the price trend, BLDP stock, D1 time frame of finance, and these are the support and resistance level. I would like to elaborate here what is a strong parabolic breakout that you have to avoid. And this is the strong parabolic breakout that it occur right here. So the price basically move in that channel and finally have a parabolic breakout like this. So parabolic move is a kind of breakout that goes straight up with a little or no pullback or floor to support. It goes higher and higher and higher and reverse suddenly without notice. This kind of move is unpredictable, and I strongly advise you never chase this kind of breakout. You see here breakout occur with a strong Mariposa type candle, and this type of candle you see many times, repeats many times. Here you can see only 3 times it repeats. Now if you enter the trade, for example, at this point, and you think that this is going to continue higher and higher, you are wrong, because it will reverse without notice. That's here, it reverses immediately. So even if you enter here, where are you going to put your stop loss? So the best place or legitimate ground to put your stop loss here is around this area, which is too wide. And you're going to have the worst risk to reward ratio. So this is another breakout tip and trick you can watch out whenever you trade Forex. Finally, breakout with build-up can help Forex trader to make more profit. This is the price trend in a stock, D1 time frame of finance. These are the support and resistance area. Now, the price is usually go in build-up around this resistance area, and as you see the price finally coming up close to the resistance, and some traders they go short here or around this area, they go short here, they go short around here, and the price basically has a very low fluctuation between this area and the area where you see an explosive breakout. Now, what you do is basically when you see the price is consolidating around the resistance area, you have to be prepared for an explosive breakout, because this is a very good situation that Forex traders look for. So the true breakout here is the candle has to close outside the resistance and wait for the next candle to close above the close price of the first candle, and you enter the trade and enjoy this big explosive breakout. But very important that where you put your stop loss, never put your stop loss below the resistance. You have to put your stop loss below the build up, 1 or 2 ATR below the build up. So this is how you do it. So Forex traders can use breakout with build up and make profit. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.